Hello, hello, hello. Well, happy Wednesday. How's everyone doing? Good morning, John. Good morning, McRangers. Good morning, Patrick. Good morning, Bull Strike Cheetah. Good morning, David Atkins. Good morning, Royal Palms. Good morning, Jake the Snake. Good morning, Tony. Good morning to the people hiding in the background. How is everyone doing this fine Wednesday? Getting halfway through the week already. Time is flying by. We had the let's see. I gotta say good morning to Jacob first. We had mortgage rates out and other mortgage information this morning. We just got the ADP employment change number coming at 37K, well below consensus, and you have Trump posting that too late Jerome has to cut rates. So, Harold, good morning. Good morning, Connor. So that's the latest, even though there's very little correlation between the ADP numbers proven and the non-farm payroll numbers, which are on Friday. That does not mean non-farm payroll can't miss, but statistically, they do not correlate very well. We got Bostic speaking. What we got Bostic speaking. We got the S&P Global Composite and Services number, but more important, we have the ISM Services at 10 a.m. Eastern. Then we got the crude numbers, then we got Cook speaking, and then we got the Fed Beige Book. So I'm really paying attention to any shift based off this ISM Services number. Still expected to be in contraction, and I'm really going to be watching the prices paid number, but that's where we sit for now. S&P so far. Remember, we got Broadcom earnings tomorrow, and chips keep running into that. What else do we have? Other than that, mega caps slightly mixed. Wells Fargo up today in terms of your overall sectors. Wow, come on. We have healthcare and technology leading, and we have utilities lagging. Utilities were up big the other day. FedWatch still has pause in June, pause in July, and cut in September. Fear and greed still saw it back in greed mode. Schiller PE trying to climb above 37 again. Can it get there? What else? What else? What else? We have to say good morning to Daniel. Hello, Charles. Hey, Christoph. Good morning from Surf City, North Carolina. Sterling on his vacation. Thank you for tuning in, Sterling. We had Dollar Tree post their earnings this morning, which was a beat. Today, there is really nothing. There is really nothing. Tomorrow afternoon is the big day, though. Tomorrow afternoon. All right. What are we looking at? We continue just to grind higher. We're up against a very short-term significant resistance level. We peaked out there back in May 20th. We spiked up there with selling pressure May 29th, and we're back up there again. Technically, just barely hanging on to double top status because of this close. But other than that, this has already dropped to a lower probability double. But I'm still keeping you on here in case we roll over because we got cycles at the top on the daily and the weekly are headed down. So still watching. That does not mean that double has to trigger. I'm more watching for more of a consolidation, but we shall see unless something comes out of nowhere. On a move through this area, the 6K area, 6,023, 6,052. So that is about it. My key support level is 59.50 at this point. That is the key support level. The minor support level is coming in at 59.75. And then if we did break below 59.50 and had a bigger pullback, I'm looking closer to right around 58.80, right around here as the next level of support. So, again, any pullback today, any weakness, I'll be watching into the 4-hour rotation zone. We don't have a strong topping. This is not a double top because it's a multi-top there. This little double is not reversing enough of a move. But if you do start breaking below 58.80 on a closing basis, we could continue to see some more downward pressure. All right. Good morning, Heinrich. Good morning, Chris. NASDAQ still just grinding higher. NASDAQ it's not above its spike high in the 29th yet, so I'm still watching that. The NASDAQ, little support base going into the open. I'm looking at around 21,650 to 21,660. We break below that. My key focus is 21,565 area, and then below that I'm at 21,435 approximately. Those are the pullback support levels. Below that, I'm at 21,165. On a breakout, again, on a little rally, 21,800 to 21,820 is very key resistance. It's got to get above 21,858 to break out. And then we have targets of 22 and 22,141 to 22,200. Remember, we do not have a potential double top in NASDAQ. So I'm wondering now, based off where daily cycles are, if this is all going to shift on Friday with non-farm payroll print. So that's going to be the next big thing, or if Broadcom really triggers something Thursday afternoon. But we're looking to Thursday afternoon, Friday. That's why I'm going to keep an eye if we pull back into these 4-hour rotation zones for still bounce plays, unless we start closing below the 4-hour rotation zone. And those are bounce plays only, very short term. Other than that, that's really about it. If something came out of nowhere, 20,940 is a very key level of support, and then 20,525 is massive support. Dow is just a mess. Dow is no longer double top. Boy. There's just not a lot of great setups that are bearish just yet. I think there will be. Dow, key support level I'm looking at is about 42,375. It's got to break above 42,750 to make a run to the May 19th high area. Russell, again, everything's at its top, but I'm, again, as I said, watching more towards Thursday afternoon, Friday that's when we're all going to roll over. Russell's still caught in consolidation. On any rally, you still have 2126. The minor support level right now is 2096. The good old VIX, all the way back down to 1770, into a very key support area. Very key support. And now what's interesting is slightly sloppy, but that is a potential double bottom. So we'll be keeping an eye on that. But actually, the markets are getting very complacent at this point. So I'm going to be looking for volatility plays going into Thursday and Friday. DAX, not much to talk about here. This has shifted. We technically have a reset double here, but not really because it's not reversing enough of a move. Let me make sure. No, it's not reversing enough of a move. So, no reset double, but this one's off the table. That's where we sit. So, very key support in the DAX coming in at 23,750. Again, there's not a ton of great setups. I'm looking at the yield, though. It was up earlier, trading back down after this just recently happened. Here was your ADP numbers, like all of a sudden everything's going to collapse, so, we're going to cut rates, but still caught in consolidation. Nothing new yet unless we break below this 50 or sustain something above 445. I'm sitting on my hands. Dollar index was up a little earlier, reversed those ADP numbers, but nothing to talk about here. Crude's interesting, trying to base right at this major resistance level. I'm still watching for any dip rollover plays unless we break up above 74 and can sustain it. And those aren't big sell-off plays. If we break above 64, we could see a lot of potential short covering and a pretty quick move. That's the only play there. Natty gas, nothing to talk about. Gold, watching for gold pulling back into some key support area. Nothing just yet. If we start getting back above 33.95, that's very key for me. And you see here, you can probably see why, the 62.5 right there. And that's where topped out before, so that is very key for me on the resumptive move, and then to retest the highs from Monday the 2nd. Other than that, if we do to continue to pull back, I'm going to be watching for to come back, kiss the old channel goodbye with the rising rotation zone. And then I'll look for new buy setups. Silver coming back to a key support level, pausing right here. So I'm keeping a close eye on silver. If it can start breaking back up. If it can start breaking up, I'm going to be paying very close attention to about 34.70 area. Copper also. Copper. This is where there's a selling pressure a couple days ago on Monday, poking up, still closing down. Yesterday, buying pressure. But if this starts getting momentum above 490, could get interesting for a very quick breakout to the upside, but it's not been able to gather steam yet. Euro, nothing new. Nothing new. Start sitting up and taking notice if we close below the daily rotation zone, and we do have the massive potential double top in play, but nothing to talk about yet. Sometimes it's best to sit on your hands. The spiders, slight gap up this morning, so on any weakness to the gap fill yesterday, 596.09. Other than that, harmonic levels are 598.03 and 653. Very, very key support besides that gap fill is back at 592.70 to 593. The Qs, which also does not have a potential double top anymore, we hit the harmonic extension, so that is off the table. So massive support coming in near yesterday's lows. Still that 522.50 area. Right now, looking to gap up slightly, so any pullback would be to the gap fill. Beyond there, I'm still watching. I'm keeping an eye on these at the 1 hour rotation zone for pullbacks. The 1 hours on the S&P are the spiders and the Qs. The 4 hour on the futures. Bitcoin, keeping an eye. We bounced off the second target, looking to possibly roll over, so I'm keeping an eye on this head and shoulders. Right there, speaking of potential head and shoulders, this isn't triggered yet or even well formed yet because it's still got to rotate back down. Another one, potential I'm watching is this would be a sloppy one, but keeping an eye on Tesla because that would trigger out of the way of the it's a horizontal potential neckline trigger based off where the rotation zone is. So going to be watching for that. Might not trigger. What else do we have? We've got Broadcom considering to power up into earnings tomorrow afternoon. Remember, if it continues to run, 266 is the next key level. It did manage yesterday to break above massive resistance. You see these two top areas back from December and January. So running very strong, getting very, very overextended. Personally, if you're not already long, would not be getting getting very risky long play based off overextensions. I mean, it could, if they beat, could gap up a bit, but you could then see some selling pressure even if they beat on earnings. URA has a potential double top, which offers some nice long entry points. Yes, it does. And you're exactly correct. And this is on my watch list, Christoph. Along with some other things that are on my watch list. But this is exactly the kind of things I would not be shorting uranium. And here, Christoph's spot on correct. Offers some nice long entry points. If we look here, see how this was key support? Key resistance, gapped above it, but then gapped back below it and turned into key verified resistance. Then we had the breakaway gap above there, setting up the potential double top. So this could be, again, this is not something I'd be shorting right now. But if you're looking to potentially get long uranium, this could be nice pullback plays. Uranium in the bigger picture, up back to very key resistance levels. Remember, in the bigger picture, at some point, Don't know when. At some point, uranium's going to break out of this huge, huge consolidation. So we had a lower consolidation here, a higher consolidation, and now we're back up to the upper end. Do I know if it's going to break out now? No, I do not. But that's why it's still on massive dips, trading around a core position, and then taking some off the table. But this could be an area on pullbacks. Again, I can't tell you what to do, can't tell you how to trade your position, but I definitely watch for this pullbacks. Maybe we'll put out something out in Slice this weekend. All right. Thank you for putting that up there, Christoph. You know, I really appreciate everybody and all their information they put into the channel. Wonderful. The melt up in SPX yesterday almost penetrated my ODT iron condor. It finally set up a 5-minute double top that triggered my call short strike. Well, there you, Sterling, you got your setups. You love those condors, and just stick to your plan. Let's look at Wells Fargo, gapping up near the 87.5. Sterling, I think you've really like mastered a lot of this stuff. Sterling's really, you know, I'm impressed, Sterling. Really impressed. Gapping up, it's got a little more potentially to run. You know, it closed above the 62.5, given multiple dip entries. This was actually a %B buy right there on the 27th. And now gaining some traction and gapping up right there. I didn't look at the news for Wells Fargo. So the Federal Reserve has removed the 1.95 trillion asset cap on Wells Fargo. There you go. Okay. So, and now this isn't just the 87.5. Look how nicely stuff lines up. Look at that. Look at this. So you had the double top, but here's the candle bodies from that double top, right? And you had the double top before that we sold off from. But here's the candle bodies from the double top. It retested that area and then reaffirmed that. And look at where that is with the 87.5. Absolutely beautiful. By the way, if you didn't see me on Futures Edge yesterday, you can watch the replay. We went through a bunch of stocks. It's very good from a technical analysis standpoint. Some of these things we already put out, but you can see some of the thought process behind the setups if you want to learn more. Don't worry about trading the setups or anything else. A lot of them are, but you can go back and see the thought process. All right? So there you go. There you go. Exactly, dark screen sleep. Okay, and that's why I say there's, you know what, when people are just promoting huge winners and everything else, and you know, I've seen, oh, I turned $2,000 into $200,000 in 10 weeks. Well, if you did, you took massive risk, and that's not sustainable. And a lot of these people who actually legitimately do it end up blowing up at some point because they keep running outsized leverage. There are losers in trading. Again, you know what? Historically, when we've done stuff and I've put out like literally trades and everything else, I average, you know, 70 to 75% winners. Okay? 70, 75, that's, and some people don't like that. They're like, I want 95%. It doesn't, you know what? It doesn't exist unless you're showing a lot of short-term dated options, but then you can take massive losses when stuff turns against you. You can make very small wins and massive losses. So take everything, people who just tout stuff like, oh, look at me, look at this, and they tout out pictures of their Lambos and everything else. You know what? It's not what trading is. That's just marketing. And if you're going to fall for that, don't bother. And you probably don't want to bother tuning into this channel. Because, you know what? I mean, I don't drive flashy cars. Look, I own a friggin' minivan to tout around 4 dogs because that's more important to me. You know, I don't live in a super flashy house. I live in a decent house, a nice house, but not a super flashy house because that's not what is important. What's important is consistency, and you know what? Don't BS people, because there are losers. What you need to do is do what Sterling's doing, wonderful friend of the channel, and that's not why I'm shouting him out, because he put stuff in here and he's learned a process and he's applied his own things, like the way he trades his condors, but he's applied key things he's picked up here. At least I hope he's picked them up here. He looks like he has, because he cites them all the time. And you know what? He's applying his own methodology, and he's becoming very consistent. So that's what I'm happy about. And he's not saying, oh, look at my big winners. Look at this, this, and this. And everybody can do that here. Everybody can do that. It's consistent. It's consistency, applying your rules. Don't jump around from setup to setup to setup. Yes, you're going to have losers. You're going to have losers. You're even going to have losing streaks. But you're also going to have massive winning streaks. The key thing is to be consistent. It's like the best hitters in baseball still have slumps. They still have hitting slumps. And then some of them go on a tear. You know? Aaron Judge is going to still have slumps. The key is to not jump around. You don't go throw out your whole... The best players like Scotty Scheffler in golf. You know what? He, number one player in the world, is still gonna... He's not gonna hit every fairway. He still has... He's been having problems with drives to the left. You know, but he still won tournaments, but he hasn't thrown out his whole golf swing and said, oh my gosh, I had a couple bad tournaments. I didn't win the Masters. Oh well, I'm gonna scrap my whole game. No, you work through it. I'm glad you're here, Bull Strike. Rich, hey, I haven't seen you in a while, Rich. We already covered silver. Again, watching for that. Most of them, and a lot of them rent their cars and everything else. You know what? It's ridiculous. It doesn't matter. You know what? Learn to be consistent. If you want to do well, whether it's trading or investing, because it's a lot of the same skill set, trading is just more active. All right? By the way, I have something to state also, because here's something I haven't talked about. Let's say silver bases. Here, if I don't get the key pullback I'm watching for, I will go with the trend on a breakout. You see here? You see here, we have a significant level right there. Why is it significant? We spiked up right here back on Friday the 14th of March. Spiked up there, forming a little mini double top. Broke through it, but failed. Tried to spike above it 2 more times, and look at this key gap reversal open. All right, emotional candle away from there. Now we spiked up there on Monday. Gap open reversal there. If it blows through this level, that is very key. So if I don't get the pullback I'm watching for and the pullback resumption of trend, I will go with a breakout trade, because that is a very key level. All right? When I don't get the pullback and we form this kind of significance, I will be looking at that, and that could be a front run for the breakout. And then what am I watching for? Well, here we go. I have the reverse harmonics on here from the lows of April, 7th of April, back to these prior highs. Reverse because it's backwards in time. To Friday, May 28th. All right? With the 12.5% and 25% extensions. So if we break above there, and then, again, I will move up a stop around when we come up to this high area. And then those are my key levels in the short term for the breakout trade. Now, if we pull back, I'm either watching for a shorter term bottoming pattern, which I don't have yet, and we do have a little mini potential double top. So if that triggers, just like in uranium, am I going to be shorting silver? No. What am I going to be doing? I'm actually using the conservative targets. What am I going to be doing? Look where that takes me back to potentially. I'll be watching these key levels for shorter term reversals into the daily rotation zone. And then I'll be looking for long setups again. So that's the exact structure of what I'm watching in silver. Okay? Either we break down and I watch for the pullback trade, or if we just base sideways and then break out, I got to go with the breakout play. Hope that makes sense to everybody. Okay, I'm not predicting. I'm setting up my potential trades, and I'm waiting for the trades to come to me. Don't know which one. But I'm not just saying, well, buy it here. These are short. I'd rather have the pullback. But hey, if it breaks out, it breaks out. Well, you're welcome. You're welcome, Sterling. And thank you on your vacation. I know, and you know what, spend lots of time with your family, and I hope you have a wonderful vacation. I appreciate you tuning in for 30 minutes. It takes time here. Sterling, to everyone else in here, it takes time. You have to spend screen time when the market is closed, watch those videos in the morning, and then go back at the market close and see how that day played out. Yes, and look, stuff I say I'm watching in here, does it always play out that way? No. But I'm telling you what I'm watching, it's not going to work 100% of the time. It works a lot more. Works a lot more. All right. But if anybody claims to be 100% or even 90% correct, they're do it in real time. A lot of these people have recap videos and everything else. Oh, here's what I was doing. No. You can see, we talk about stuff before the market even opens. We talk about it. We don't go back and pretend, oh, these are the levels I've used, so now here's your little short-term stuff. Watching to see if we can hold up. Got to hold up above here in the S&P. We got to start basing around here to sustain something. And let's see where the tick is. Not a terribly strong opening, so I'm going to be watching to see if the S&P can hold this these key levels going back on any tick pullback. So on a tick pullback, I'm going to be watching to see if this can turn, and this is an area. Don't treat these levels as brick walls. This is an area with the rising rotation zone. All right, everyone. You'll be shocked at how well the levels might show up, then drill down and see why. Again, thank you, Sterling. And learn it. I also show you why I don't do it every time because we'd be here for hours in the morning. But like for key things that I'm watching. By the way, this was a little mini double that's already played out. I try to show you key levels that I'm watching and like, all right, here's why I'm watching the harmonics and here are how they line up with a breakout or breakout zone. Or here's how the 62.5 lines up with this. The more you can then go back to your own charts, put it on, because don't just take my word for it. Put it on your own charts, draw the levels. Spend the time doing it because that's going to ingrain it and you're going to spot things. You're going to spot things that you're not necessarily going to get from just watching a video. And it's going to ingrain into your brain. And once you learn how to spot key levels, I don't care what entry techniques you use. You learn key levels, you can have a MACD entry, you can have a divergent stochastics, you can have a wiggly woogly entry. I use the wiggly woogly entry technique. Learn the key levels, learn how to raise stops and how to manage risk. And you're on your way, and then be consistent. And don't be under the illusion everything's going to be a winner because it's not. If you keep your losses in line, you keep your losses smaller, you let your winners run, also learn how to roll things into patterns on strong moves, learn how to trade with the trend more often than not, unless it's a major reversal pattern. That's why I said, you know what? Still watching for dips. We're getting the cycle tops, but we don't have a major sell pattern yet. Sterling's been noticing a lot of short-term double bottoms on these news dried up. Yes, there have been. And a lot of them have played out very nicely. All right, with that, I hope everyone has a wonderful, wonderful Wednesday. And I will see you all tomorrow. Sorry for my little rant, but Just think it's important for people to learn this stuff. And thank you, Dark Stream Sleep. Where is he? Where's Dark Stream? Thank you, Dark Stream, for chiming in and learn the real stuff, not the fake, not the Lambo trades. I'll talk to everyone later. Bye for now.